All right, well, speaking of one of those, Apple is pulling back today, Dan Ives, by not too much, 0.75%. Can't go up every day, but you think it's going to go up more times than not. You raise your price target to 220 from 205. Why?
Look, I think right now it's about iPhone units. And in terms of our Asia checks over the last week, we're actually seeing stability to actually upticks. And this is all the drum roll to the iPhone 15. We think now we could be looking at units 235, 240 million with ASPs that are increasing. You put that together, I mean, numbers would have to come up, I think, modest to significantly for the street. And I still think right now, Apple's playing chess. Others are playing checkers in terms of what's happening on services and some of the parts that I view $3.5 trillion, I think $4 trillion market cap in the next 18, 24 months.
You think the services revenues are going to pick up again to where they were before? Or what are we talking about here?
I think we're getting back to double digits for services. I mean, you've talked about that's really the key from a valuation perspective. Now we're starting to see more and more upticks from App Store to what I believe in terms of over the next few quarters. You'll be looking now to what's a trajectory for $100 billion of services revenue, and we think the valuation of that is $1.4 trillion as it all starts to play through.
So they introduced Vision Pro. I was out there. There were, as we showed yesterday, a clip from TikTok, gasps in the room, some chuckles at the $3,500 price tag. Your reaction to all this is what?
My reaction is that this is about the developers that they're going after. There's a battle royale.
Yeah, no, there was the developers who were like the ones who were gasping and laughing in some respect.
Sure. And
the small sample that we saw, that's what that was.
Yeah, and what I would say, my conversation with developers, you have some skeptics, but I think overall what they're essentially building here is a moat that's starting with AR, VR, and it's actually going to lead to really an AI ecosystem that they're going to be building out within the App Store, which is why I view this from an Apple perspective as just leading to the next generation of growth around services and next devices.
And Tesla today, I mentioned it, down tape, but that stock was sort of bucking that trend, right? What's going on there?
I think it's all about units in China. I mean, a lot of worries about that earlier. You know, if we think about this year, now, even after the price cuts, we're seeing demand continue to increase. I think this is one that margins stay where they are. You have units start to uptick, battery technology that I think is coming down from a price perspective. I mean, Scott, you could be looking bull case, $250 as this all starts to play out.
You have a take on this?
I think the other thing that's going on is there is a little bit of a bid for the dented toys in the market. So Tesla, everyone would have looked at that chart and said, looks toppy, looks like a top, can't get above 215. Now it did. Now you're reaching for beta in areas that have not been one of the 7 stocks that have been carrying the market for a while. So that's I think the portfolio dynamics around it. But I'm not going to deny that it also feels as if every time you talk about, the players in EV, it all comes back to who's the incumbent, who's got the head start, and people rediscover that from time to time.
Back to Apple. I mean, so as this stock continues to go up, it's like, okay, 25 times and 28 times and 30 times. At what point do you say, even as an objective observer, like, okay, it's a little too rich, a little too rich?
Yeah, I view it as sum of the parts. I view it as if the services business, which we believe now starts to get back toward that $100 billion trajectory annual, and ultimately from a units perspective, you look at 235 million units, you're looking at numbers that could come up 5, 10% with margins that actually show an uptick because of the chip ecosystem. And that's why I believe you could start to rationalize a valuation, even at these numbers, $3.5 trillion.
The skeptic would say that you keep increasing your sum of the parts valuation to justify the valuation as the stock continues to escalate. And the earnings, by the way, the earnings growth is not what it was.
Sure, and to that point, I would say it's all about really services. I view the value of that services as the growth continues to uptick and more developers. I think now you're really seeing them double down. The overall app store and ecosystem of Cupertino, that's what really ultimately is the value that separates them from every other tech company.
Did you expect $3,500? Give me your honest view right here with the microphone on television.
Oh, 3,000 was our estimate. 3,500 obviously was more than we expected. But again, right now, It's all about developers, 150K units we think coming out of the gate. But Scott, 2 years from now, I think there's 1,500 hours in terms of what the second, third versions will be.
I appreciate you being here.